YouTubers, Mike Martins here with the Mike Martins channel. Guys, thanks for joining me and being part of the channel and subscribing. And where we predict here, we don't post-dict. 7 months from now, a new YouTube channel will show up and show everybody what we did wrong in the past. Well, here, we are actually kind of picking up what we're doing wrong now to help protect or trying to save whatever futures our grandkids may have in the future. Anyways, so here it is. This is from Better Dwelling. This was sent to my notifications like 3 minutes ago. So I kind of want to talk about the worst case real estate scenario drop. So here it is. RBC, this is RBC, Organized Banking, says worst case for Canadian real estate is a price drop of nearly 30 points. Now, they are starting to look at the factors now. Capital flows from China are getting tough. Capital money coming in from China is becoming very tough now. Okay? Especially with all this stuff and going on and the sickness. And it's kind of funny that I'm not even gonna go there. So anyways, so here it is, guys, a nearly 30%. Now, now we made a video about a year ago about this before this whole thing happened, the whole sickness. Housing needs to be within average wage earners from $41,000 to $78,000 a year is an average, not minimum and low wage, but average wage earners. Okay, whether you work for the city, whether you're doing your thing or you got a degree and you're making on paper what looks to be a good income, but realistically it takes you nowhere. But let's get realistic here. 30% is cute. A 30% drop in real estate, it's cute. It's nice. But no. To be within average wage earners, because housing needs to be driven by income. And that's what Stephen Williams said on the show. If you look at the intro on the YouTube channel, he said basically, housing needs to be driven by income. And he's right. Same thing with Steve the Plumber. He said the same thing. You got to look at wages and see what your buying power is after your gross, after your net wages, after your deductions from all your taxes, right? So you need about a 55% correction. That's in Vancouver, and then you need about a 48% correction in Toronto. All the little cities outside of the major cities need to see about a 30% correction. So I'm thinking this is a benchmark of Canada as a whole, a benchmark percentage rate across the country, where other areas you'll see more and other areas you'll have less. So are they going to allow, with these major lockdowns and this enormous sickness that's going around, companies and small companies, especially the private sector companies that support the public sector, basically the mom and pop supporting the governments, are they going to allow the private sector to get back to work and actually start funding instead of looking at ways to take money from people's accounts to help stimulate the economy? That's going to be on Mike in the Night. We're going to be talking about bail-ins on Mike in the Night this Saturday night. Set your reminders. So Canada's largest bank is prepared for price drops. Most would find unthinkable. Royal Bank of Canada, RBC filings show possible risk of scenarios forecast. Over the next year, the base forecast shows virtually flat growth. In a best-case scenario, growth would hit levels similar to previous years. In worst case, they have forecast prices to make the biggest drop since the early 1980s. So now, here's the deal. You guys remember what happened in the early 1980s? We had Reagan come in and save the day, and by raising interest rates to absorbent amounts to save the economy and save the country. And that created that Reagan price hikes. Look at January 1980. Look at the price of gold, where it went in January 1980. Look at it follow up February 1980 and March 1980. Look at those 3 months for gold, and you'll look back at me and say, holy crap, Mike, you know your history, or you know something, Mike. Well, I know things, okay? I drink beer and I know stuff. I'm joking. That's from the Game of Thrones. Anyways, macroeconomic scenario assumptions. Quick intro. IFRS 9. Macroeconomic assumptions are for people that aren't in finance or aren't secret finance nerds. IFRS 9 is a financial reporting standard used by most of the world's banks at this time. One of these standards requires an assessment of risk using unbiased and possible economic outcomes. Typically, 3 macroeconomic scenarios to be used: a base, best, and worst case scenario. So what they do is they break it down into a graph, show you, basically you're trying to sell, or you're trying to show investors a projection of where their money is going to go. So they break it down. This is the worst case scenario of what could happen. This is the medium case scenario, and this is the best that could happen. So let's take a look. The base, best, and worst case scenarios are what they sound like. Base case is the average. Okay, wait, let's go over there. The forecast numbers are important for each organization's preparedness. Too optimistic, and just a few impairments can result in serious damage. Too negative, and you'll be putting aside way too much capital, placing a drag on the company growth. Sorry, there aren't just random numbers. They're considered reasonable outcomes. That said, let's look at their real estate scenarios. So who does this? Well, there's a gentleman out, Martin North. I've had him on the channel here on Trends in the Housing Market, and he does a lot of macroeconomics and economics using numbers, sales, listings, how long on the market. So check out Martin North from Walk the World. Martin North, he's really good at macroeconomics and macro housing economics down in Australia. He's really good. So, base, Canada. Canadian real estate prices are flat. The base case isn't as ambitious as most would guess, and it's actually quite modest. The bank's forecast sees prices rising 0.6% over the next 12 months. That is a terrible. I can tell you guys a dividend paying stock that could pay you 4%. 0.6% in the next 12 months. That means less and less people are going to be investing in housing for an investment. So you're going to see a lot of that happening, right? With the numbers starting in October, they expect the compound annual growth of 4.5% for the following 2 to 5 years. Basically, they see the market as flat in this scenario. So 4.5% in the following 2 to 5 years. That's a remarkable, that's a big assessment. And in the position we're in right now, there's your composite, there's your base case, there's your upside, and there's your downside. There's the downside. So there it is. There's the benchmark there, 600 large. I mean, if it starts to go down here, you're going to start to see housing go within wages and affordability. But the problem is, if they raise interest rates, which they should be doing, and they should have been doing since the last 2 years, then we wouldn't be in this issue right now, because you'd see this curve. You see this get stomped. Or they're going to flatten this curve, basically, so to say, in today's terminology. They would have flattened this curve. So if you go back to right here, and that's when the curve needed to be flattened, right about there in tail end of 2017. They should have done something about it back then and started raising interest rates, because then you would be back to about right here right now today, but that's not the case, and they don't want to do it. Best case. Canadian real estate prices rise 6 points. Now, don't laugh. We're looking at in the next couple of years, you're looking at an 11.1% increase if the best case scenario rides out, and that's what's happening right now in Australia. It looks like there's what pandemic? What pandemic? What are you talking about? Australia looks like it's riding it out. Australia looks like they're getting more money in. They're getting in more investing. I think foreign investors are looking at Australia a little bit more, looking at it more serious as a potential. It's closer to China. It's a good country to take over. You know what I'm saying? Worst case. Now, real estate prices fall almost 30 points. The worst case scenario is much larger than most banks have acknowledged. And this is important, but it's similar to Moody's worst. The bank forecasts national price drop of 29.6% over the next 12 months. In this scenario, compound annual growth about 2.9% would follow the next 2 to 5 years. Canada hasn't seen such a significant decline in the national level since the 1980s. Again, go back and look at interest rates in 1980. Earlier this month, RBC's chief risk officer said he was putting more weight on the downside scenario. However, he didn't use the 29% decline seen in this economic risk forecast. Instead, he said they are expecting prices to fall 7% and remain depressed until late 2023. Reading between the lines, it sounds like they are internally forecasting worse than expected outcome, but not worst scenario they've prepared. So there it is, guys. It's not looking good right now in the scenario right now. This scenario does not. But hold on, we forecasted this for years now. But there should be a decline. There should be an adjustment. There should be Next step, negative interest rates. Now, and going digital currency, right? Again, Canada would be in a recession without money laundering. So we would be in a recession. We've caught $200 billion laundered through Canadian real estate by these are the provinces right here. And we only got a few years. The Liberal government shut this investigation down real quick in a heartbeat because it will put our country into a recession if we don't bring in illegal money. Now, I have a comment here from Trends in the Housing Market. Guys, check out Trends in the Housing Market if you haven't yet. There it is right there. Trends in the Housing Market from, I put America edition on it, but we cover the whole Commonwealth and the United States. And take a look at this right here. Seaflake says, who cares about Australia or New Zealand? Irrelevant to Canadians. Are you out of your tree? All the data and all the forecasting that I've been putting and compiling on this channel over the last 6 years has been connecting the dots across the Commonwealth. Every country is in competition for the same thing, and that's wealthy investors, okay? Now pay attention to here. Comment on how houses in Ontario, when sold, are always overbid on, escalating inflationary trends, contributing to displacement in rental housing market, piles of money coming out of Toronto, driving up housing costs in every direction outside of Toronto. Example, Peterborough, Oshawa, Port Sarah. So I said, basically, it's not irrelevant. It's a pattern. Follow the money. Now, Seaflake, I'm just going to follow that up, and the video you want me to talk about or discuss, this is what you posted 20 hours ago. We're just going to go to videos I made 4 years ago. So this is in 2016 I'm making this video. Investors pumping up Toronto real estate market. Investors. Look, millennials taking on too much debt. Affordability housing migrants. So we're talking about migrants that are leaving Vancouver, that are leaving Toronto, that are leaving all those other cities. So let's take a look at here. Let's look at I usually got my opinion on here. I don't know why that's not even loading. Yet, people are moving. Data from moving companies indicate a significant uptick in moving and material. So there it is right there. We already covered this. So let's go back here. What else did we cover? Investors pumping up Toronto real estate market. A record-setting year for Canada's housing market. Look at this. Canada wants more Chinese, 500,000 per year. And that's a very, very big article I read. First-time home loan buyers. Disaster ahead. Look at this. Look at this. Economy becoming more dependent on housing. This is from, when was this? 3-4 years ago? I don't know why it's not loading. There it is right there. January 2017. And there it is right there. So let's keep going. Let's keep going. China will own Canada by 2020. Look at this. From 2017. Look at that. I'm predicting that. New Zealand housing sell-off. China clamps down on banks moving currency overseas. Price boom in the GTA. Again, if you look at these videos, we've been talking about this for years. I've commented on all this stuff already. We've made videos about all this already. Look. YouTubers, Mike Martin's here. Mike Martin's channel, bringing another housing crisis episode. Things here in the West Coast in BC have been quiet. Things have been quieting down here. Why? Because the foreign buyer's tax was working. A couple of people have already applied for that new loan, introduction loan, match me loan type of thing. Match what you... Yeah, first-time home buyer loans right there. Let's keep going. Home prices data gone. Foreign buyer's tax working. I'm leaving Vancouver. I'm done. Home buyer short on cash. Watch this. Toronto house prices to the moon. Abolishing foreign buyer's tax because it's working, so they got rid of it. Canadian homeless crisis. Who else? Home prices drop. This is all from 2017. Chinese entering the markets at full force. Urgent. China suffers largest capital outflow. So there's money leaving. The second they announced that they were going to put in restrictions, China has removed so much of its money. Toronto housing market on fire. So there it is. And then people are being displaced. I talk about that in there. I talk about that in these videos, guys. So I do talk about families being able to unafford. Look, young families leaving the big city, brain drain. So this has been happening for years, guys. We've been talking about the same stuff for years. People having to move to secondary, tri-cities, quad cities. We've talked about this. People moving to cities outside of Toronto up to 100, 200 miles. We've covered all this. This is old news. But guys, don't you worry. 7 months from now, a new YouTube channel is going to come out. He's going to be the hero to everybody because he's going to post-dict everything that happened and make it look like he said it before. And then you go back on his channel and it's not even 3 months old. And he's been talking about how he's been predicting all this for years. Well, because I go back on videos, it's upsetting a lot of people that I go back on videos from 3, 4, 5 years ago saying how I said it back in the day. And a lot of people are upset and they leave comments about that. Not liking how I said things but in the past, but actually are recorded there. Let me know what you guys think in the comments below. Is it important to know what's happening in Australia housing and New Zealand and the UK and Western United States? I think it's all important. And Canada, of course. And when you start tying and connecting the dots, you'll start figuring out what really is happening in this housing market and where things are headed. I wanted to throw this out there. Thank you very much for watching. Let me know in the comments below. We'll talk soon.